This is our Forex blog for November 8th, 2011. And like most days, we really want to buy the strongest currencies versus the weakest and sell the weakest versus the strongest. Today, you see some strength starting the day off in the dollar. The daily trend is up here a little bit before midnight. The weekly trend's up. The monthly trend's down. I pretty much ignore the monthly trend myself. However, I do use it to decide how many lots to trade. If the daily, weekly, monthly trend's all up and the real-time momentum is to the upside, you can trade more lots if you find a weak currency that's weak on all time frames, such as the CAD here. Now, the CAD's not super weak on the weekly and monthly. The Swiss is, but unfortunately the Swiss had a counter trend day today. The longer term trend is really strongly down, but it's having a lot of strength today. You still can trade it to the short side when you see it here because you never know what's going to happen in the future. But once the strength comes back in like that and has a little bit less weakness and strength, you got to see what's going on and trade what you see versus what you hope will happen. It's always best initially to look to trade in the direction of a longer term trend, but if the real-time evidence is showing otherwise, after you see less weakness and strength, this weakness at least was about equivalent to what the previous strength was. So you could have assumed that weakness would come back. But once the real-time momentum comes in like that, it's pretty clear that the momentum is to the upside. See a lot of strength, half the weakness. Strength comes back, and that's what typically happens. The pound, very strong on all time frames, and when you get extreme strength like this, followed by a little bit of a pullback here, when it's in the direction of a longer-term trend, usually that strength will come back, as you can see here, for about an hour and a half. So let's start off. We have the dollar and the yen both strong. The dollar has a stronger weekly trend than the yen does. You have a lot of strength here, followed by very little amount of weakness. So it's safe to assume, coming up a little bit after midnight, that strength will resume. Now, which currency is the weakest? Let's scroll. Look at this. The Australian, extremely weak, followed by very, 1 5-minute bar of intense strength and 10 minutes of very mild strength, almost nothing. So this is a currency that's likely to resume its downtrend, and it does. And this one's a currency that's likely to resume its uptrend, and it does. And notice the weakness here in the dollar was less than the yen. The weekly trend of the dollar is more than the yen. So it's a clear no-brainer. A little bit after midnight or right around midnight, you are looking to sell the Australian dollar. The weakest is the Australian. The dollar is the strongest. Here's a 6 pips per bar chart. You get this little bit of a pullback here. And I always like to draw trend lines underneath the bar's low. It gives you a little bit faster entry sometimes than our trailing stop on this. And you can see short around 24. This comes down. It went down 22 pips. When a currency is coming down, there's a lot of different ways to trade these. You can draw your fibs off the previous swing and then keep your stop above the high here. But it was pretty clear that it came down, came up, came back down again. Usually when it barely makes a lower low like this, if it goes above this little swing low right here, I'll tend to get out of my trade, because usually when currencies are this weak, they come down to the support level, which is a monthly pivot level right here, and the lower containment band. So I would have personally exited this trade somewhere around 10 for about a 12 pip win. Notice the extreme weakness and no strength. I probably would have shorted this right here and had a small loss. And then the next trade is the one that finally went your way. Short here, and you can see it pretty much fell, and it got really extreme weakness. And most markets stop at the second fib target. So at least exit half your trade here at 86. Maybe let the trailing stop get you out of the other half. Your average exit might have been around 92. You short this at 16. You made 22 pips. So, you might have made 10 pips on the first trade, lost 8 to 10 on the second, and made 20 on the third. And usually when currencies are weak and they come back up to the hourly moving average, the first time they hit the hourly, they almost always find resistance there as traders are looking to sell there. Now this one had quite a bit of strength, so you might not have gone short there immediately at the hourly, but once it kind of came down here and went sideways and broke down, that's not a bad trade. Notice as it came down, it had less weakness and strength. We're not looking at the currency meter here, we're just analyzing what the real-time momentum swings are. The move up had a lot more strength than the move down. When you're underneath the hourly, it's much more likely to go down than up. But when a currency comes down just this short amount of 15 pips and then goes sideways like this, and has no weakness, it's clear that the trend's not likely to resume itself. And notice at the time here around 5:30, if you look back at the currency meter at 5:30, there's really not much strength or weakness. Pretty much, there's not much going on. You want to focus on currencies that are the ones moving. Like, for instance, the pound here. Incredible strength at 2:30. All the time frames match. You have a little bit of weakness right here. Let's say you were looking to find some strength coming in at 3:15. Obviously, it doesn't in hindsight, but let's look as if we were going to take that trade here. The point is, when trades don't work, you have tiny losses. And when they do work, you have sometimes small, medium, but occasionally you get those 20 to 50 pip moves, which allow you to make money. The vast majority of the time, when you see a lot of strength followed by very little weakness, and the longer time frame is up, that strength resumes. And you can see it in the dollar right here. It resumed. The weakness in the yen for only 5 minutes here resumed. There's a lot of examples of that. A lot of strength right here. All right, so let's look at some other examples today. And you can also have traded the Australian against the yen as well. Weak Australian, strong yen. Notice this one also is a nice trade because it has a narrow range pattern here. Anytime you have a very narrow range pattern, when markets break out of there, you tend to have trends, and most of the time it's a two-wave move. You always want to know where the first Fibonacci profit target is. And so when this breaks down out of this narrow range pattern right here, it went right to the fib target. We have some counter trend signals showing up. You always want to exit half your trade at support when the market goes sideways. So you're out of the first half at 50. You made about 15 pips on the first half, and I would probably have exited the second half of the trade here. It barely went up. Notice the strength right here, and then the strength falls off a cliff. That's a trend that's likely to continue down, so you redraw your latest fib targets on here. You go short again right here. And notice this comes down, and comes down again, and then some strength comes in. You're probably going to get out of the trade with a very small win here at 51. You barely made 6 pips. And notice as it's going sideways right here, there's no strength. The trend's down. We never hit our fib targets before, so you want to keep them on there, but you might also want to draw fibs off this last wave. I always make a second fib target a little bit thicker. And notice when you go short right here around 50, it comes right down here and carves through the first fib target. And as it's coming down, notice you're above 80 weakness, which is extreme. And it comes right to this level. You always want to exit half your trade here at 27. It's the 1.618 fib of the previous swing, or of the bigger wave. And then of this last little tinier swing move, it's the 1.382. This is called a Fibonacci cluster, and oftentimes that's where the market will stall. You always want to exit half your trade there. So you made about 20 pips on the first half, and it's kind of going sideways right here with the weakness leveling off. As soon as it goes above these bars high, I would personally be out of this one here around 35. So your exit probably averaged out to about 32. You're short this around 50. So you made about 15 pips. Now, it's not a very big win. There wasn't an explosive trend today like there oftentimes is. But if your losses are 6 to 10 pips or 12 pips, and your wins are 10 to 15 or 20 pips on average, and you're 50-50, you're still going to make money. On days where you're 60 or 70% winning, which some days are easier to trade than others, you're going to do a lot better. Now, what if a strong currency today has a longer time frame trend that's down? You can still trade those. You don't necessarily need to look at the longer term trends, but just be aware that they're much less likely to work. Instead of maybe 60 to 80% likely, they're maybe 50-50, and they're much less likely to give you big 30 to 50 pip wins. So trade these. If all you have is counter trend days, you can see strength in the Swiss, but the longer time frame trend is down, then just trade them as scalps. Or if you want to, trade those against another currency, which, like the Australian, also has a weekly trend down. That way the longer time frame trends kind of offset themselves a little bit. For example, a lot of strength here followed by a little bit less weakness. You could, and the Australian was extremely weak. It's probably one of the weakest ones. Why not look to sell the Australian Swiss coming up a little bit after 5? Let's take a look at this one. Notice what happens on here. Australian is weak, and the Swiss is, strong. Instead of trading it against the dollar and yen, which are also strong, trade it against the weaker one, so that the longer term intensities kind of counteract each other. They don't have, it doesn't play as much of a focus here. Notice 5 o'clock right here. The previous move was down. This one was extremely weak all day. You might have sold this little pullback trade right here with your stop above this little sideways consolidation area, or you might have also sold the low here. And you always want to draw your fibs on the last wave. Most of the time the market doesn't go below the 1.618. This one briefly did and then kind of double bottomed here. But 92.505. If you shorted it here at 90, you made 40 pips. If you shorted it up here at 22, you made 70 pips. So, some trades are going to be small, 5 to 25 pip wins, and you're going to occasionally get the bigger wins. Let's look at the pound. Extremely strong, and then it's a little bit weak here. Only one 5-minute bar has intense weakness, but I always look at the we had about 30 minutes of really intense strength, 5 minutes of intense weakness, but most of the red bars are just mild weakness. So when strength comes back in here at 4, you could consider buying this, especially since the longer time frame's up. You're never going to go broke betting on the forces of the market. Don't swim upstream when you can easily swim downstream. So at 4, look to buy it. What's the weakest one at 4? Well, the dollar had intense weakness here, but it already was weak for an hour. So was the yen. I'd like to find a currency that was previously weak, maybe from 3 or from 2:30 to 3:30 maybe, and then had mild strength for the last half hour or hour. So what do you have there at 4? Yeah, this one here, the Australian, is a perfect example. Intensely weak all day. A little bit of strength, but less strength than there was weakness coming up to 4. Why not look to buy the Australian, buy the pound Australian. Coming up at 4. Now here's 4. The pound had a bit of a pullback. The trend is clearly up. You always want to also draw your fibs from the last, big move, just to get an idea. Is there support there? In this case, yes, there is. It's a 38% fib, and it's most of the time strong trends don't go below the 50. So if you really wanted to give this a chance to go up, you could put your stop underneath the 50 because it's very unlikely to get hit given how strong the trend was. And coming up to 4, you have a nice little breakout above, this little downtrend here. You would be long somewhere around 1.5550 or so right here when it broke that trend line. Your stop should be underneath the swing low by a pip to 2 pips. And, if the trend's going to continue, it's going to break the high. But most of the time, strong trends at the minimum will retrace 50%. So 71 is your profit target. That's 20 pips away. You're risking about 15 pips to make 20. It's not the best win versus loss ratio trade. And you also could have just traded this as a scalp. You bought it here, it went up and kind of stalled at the 32%. You get out, and then you get back in again as it breaks out of this. And you can always draw your fibs on there to get an idea where your profit target is. You're out of that at 81. This second trade here in at 64, you make about 17 pips minus your spread. That's for those who like to scalp.